Last year, there was 100,000 letters sent to Bitcoin owners, reminding them of their obligation to declare any wins. 2021, they're expecting that number to go up to 300,000 letters that will go to taxpayers who they know have Bitcoin. So, the crypto market has gone up 420% in the 2021 fin year. So there's a lot of people sitting on gains, and the information is out there, and the ATO are across it. So, Jace, these letters, have you had any clients been sent letters from the ATO?
Definitely.
Yep,
definitely. Look, beyond the letters as well, as I touched on in earlier episodes, it's popping up on the pre-fill report. So whenever you go to lodge your tax return or you have an accountant do it, it's going to pop up under a section around capital gains that says, do you have gains to report? Like, we know you've got cryptocurrency. Do you have gains to report? And we're also getting clients that forgot to tell us or happened to not mention it in previous years. They're now getting follow-up letters saying, hey, back in 2019, we think you bought and sold crypto. Do you have something you forgot to tell us? So they're kind of being a bit gentle at the moment. It's like giving everyone the chance to kind of come clean on what happened. But I mean, those kind of gains, you're talking 400% or more. There's taxes to pay on all of this along the way.
Okay, so again, we're not giving advice here, but if you're someone that's listening and you're thinking, geez, I sold some crypto or I'm buying and selling crypto, what would be a safe percentage? You can say, you know what, grab that much of it when you sell it, grab that much of your profit, put it in another account so you don't have a problem come tax time. Would there be a safe percentage that you would say?
If you knew your marginal rate,
Yep.
you put your marginal rate aside.
Yep.
But if you're just going to average it out, put at least 30% aside for tax.
Yep.
Then you're averaging out. A lot of people kind of hover around the 20-25% mark. Then you've got high income earners. If you're a high income earner and you know you are, you're putting aside 40-45% because you've done your dough by selling. And a lot of people sell within the year too. They're buying and selling. They're not actively buying and selling enough to be a day trader, which means you're running a business, which means you don't get capital gains discount. But they're buying and selling within the 12 months, which means they don't qualify for the CGT discount. So
which is 50%. Right?
Yeah. So you're paying tax on the whole gain. It's a monster of an area in a sense of how much we need to be across it, in the accounting industry.
So what signifies a day trader then?
Volume and activity. So actively day-to-day buying and selling, actively being in there.
So it can't just be four buys, 4 sells. It's got to be
4 buys, 4 sells a week or a day, or you're talking
a year.
Yeah. A year, that would be more holding on a capital account because you're not actively doing it day-to-day to be running a business. So you got to think about the activity. Are you running an enterprise? Is it a business of buying and selling crypto? And if it's not a business, then you're generally holding it on capital accounts.
Well, that'd be great advice to our listeners because it's, again, if they want to go down that route, there might be a way to be able to do that more effectively rather than the capital gains.